All right. Good morning, ladies and gentlemen. Good afternoon, good evening. Understanding that we are joining this Zoom from different locations. Yes, so greetings to all of you and welcome to our training. If you can hear me, if I'm loud and clear, kindly give me a 1 in the chat. Yes, I'm not sure about today's network. So if you can hear me, kindly give me a 1 in the chat. I do have a couple of co-hosts that are going to help me today if I happen to experience network problems. Yes, whenever I get kicked out of the Zoom, they will help me to come back. So, yes, so welcome everyone. This is Coach Mopiwa joining you this morning from Johannesburg. So we are continuing with our training. We are on day 2 of second week. We are on day 2 of second week. So I trust and believe that we will be together until to the end of our session. We are so grateful this morning for the gift of life. It's a privilege to be alive today. And I hope and trust that everyone is also fine. So yesterday we started looking at the candlestick chart patterns, and we said that the candlestick chart patterns, they are a language of the market. They are a language of the market. Let me see. Okay. All right, let me do some settings here. In case visitors, they visit us early in the morning. So let me direct all the messages to the host. Okay, let me do this because I also need a response. Yes, when you are teaching, you need to connect with those that you are teaching. All right, so let's see. Okay, let me leave it for now. When we happen to be visited, then we'll make sure that we control the chat box, right? But for now, we're gonna need response. Okay, so yesterday we started looking at candlestick chart patterns. Yes, candlestick chart patterns, and we said they are a language of the market. When you are able to understand the language that is being spoken in the market, you are able to participate very well. So when you are participating very well, you are knowing what you are exactly doing because you are able to understand the communication. So buyers and sellers, they do have a language that they use to communicate. And that language is embedded or it is hidden in the candlestick chart patterns. So when you study or when you are able to identify chart patterns, it means you are able to read the language of buyers and sellers in the market. So when you are trading, then you are well informed of what you are doing when you are making your trading decisions. At the same time, you also needed to know that when we trade on the back of big boys. You know, they are those market movers. They are those controllers of the market. Yes, we know that they are institutions that trade. we've got companies that trade, okay? Their amount of capital is so huge to the extent that when they pull out, when they take profit, you are able to feel that something has happened in the market. So yes, we trade on the backs of those guys. So when we know what those big guys are doing, we are able also to manage our small capital that we are trading with. So we needed to know what these guys are planning to do, all right, so that we prepare ourselves in terms of buying, in terms of selling, because we want to be part and parcel of the market as well. So that is a candlestick chart patterns. Now, we looked at one candlestick chart patterns. I said that these candlestick chart patterns, they are a market reversal signal. It's either to the upper side or to the downside. Remember, we only have two forces in the market: the buying pressure force, the selling pressure force, right? So we do have market reversal signal in the form of candlestick chart patterns that help you to understand, or that help you to identify that this market might go up, this market might come down. Whenever I'm going to, whenever I'm using the word market, I'm simply talking about the price. We are discussing about the price because we want to find out, okay, which one is the right position to make an entry in the market. So we are looking at the price action here. So whenever I'm talking about market, I'm simply talking about the price. We are analyzing price in the market. So we looked at one candlestick chart pattern. Can somebody remind me what type of a chart pattern did we look at yesterday? We only did one. What type of a chart pattern did we look at yesterday? Can somebody type for me in the chat? Can somebody type for me in the chat? What type of a chart pattern did we look at yesterday? I'm not sharing screen. I'm not sharing screen. That's true. I'm not sharing screen. Yes. I'm just engaging with you now. What type of chart pattern did we look at yesterday? Those who attended yesterday's class. What type of chart pattern did we look at yesterday? An engulfing bar. Okay, yes, an engulfing bar, but it was a bearish engulfing bar, specific, a bearish engulfing bar. All right, so what does the bearish engulfing bar do? What does the bearish engulfing bar do? What does the bearish engulfing bar do? What does it help you? It signifies what? The bearish engulfing bar. It signifies what? It signifies what? It is a market reversal signal to which side? It is still the same question. It is market reversal signal to which side? It is a market reversal signal to which side? Yes. All right. Yes. It is a market reversal signal to the downside. Okay? It is a market reversal signal to the downside. It signifies downtrend. Okay? It signifies downtrend. So it is composed of selling pressure candles. It is composed of selling pressure candles. All right? Meaning to say the selling pressure is the one that creates the bearish engulfing bar. All right, so let me share my screen and then we proceed from where we left yesterday. I will try to move a little bit with speed, but with clarity at the same time, so that we can cover probably a lot. We can cover some more. Yesterday we couldn't do much. Okay, so this is what we were looking at yesterday, that this is a bearish engulfing bar. It is comprising of two candlesticks. Yes, it is comprising of two candlesticks. The first candle is a smaller candle, and it happens to be a buying candle, okay? Or a buying pressure candle, all right? So it is small in size. It has got a small body, while the other candle, it is a selling pressure candle, and it is a big bodied candlestick, right? So in this scenario, the market is coming from the downside. It is rising, okay? So it has gone high up, and we are looking at the top of this peak over here, which can act as our resistance level, okay? So when the market is approaching this resistance level, in most cases, there is a reaction to the market. The price reacts to it, especially when the market has been going high up, right? So this candle, it signifies that buyers, they cannot push the price further up, since they are coming from here, trying to push the price to the top. As they are reaching Mount Kilimanjaro, they are getting tired, they need to rest. As a result, it's when they get ambushed by sellers. Then sellers will take advantage, because now buyers, they are tired. So the significance of this small candle, it means that buyers, they are no longer having the same energy that they started with from the bottom here, pushing the price to the upper side. As a result, sellers, they come in and then take the game. All right. So this is a bearish engulfing bar. All right. This is a bearish engulfing bar. Let me bring this here. Seems like my slides, they are not in order. Okay. Seems like my slides, they are not in order. All right. Let me come to the bottom here. All right. Okay. So this is an example of a so it has gone up, it has belt up to coming from the bottom here. You can see that price has really gone high up. Okay, that's why we say buy low and sell high. So you can see that price indeed went up. As you can see this candle, which is a green candle, that signifies buying pressure. Okay, but the buying pressure is not that much compared to the selling pressure. Buyers are failing to break this roof to go up there with the price. Okay, so when they are trying to raise, is when sellers, they take over. So you can see that this candle has engulfed this one. As a result, you see what happened to the price. There was a reaction to it, and then the market went back downwards. So when you happen to be caught up here, okay, when you happen to be caught up here because you entered the market unknowingly, if you do not have enough capital to open margin calls when this price is coming down, to open margin calls when this price is coming down, it means you are going to remain on top here, waiting for this market to bounce back to you again. I may not know when exactly this market might come back here again, but the bottom line is you are engulfed by the market. So you are going to remain here on top. You don't have money in your wallet to open margin calls, so that you are able to follow the market whenever it is going down, and then your robot is able to buy more of this asset, so that it can pull the entry, which is called our average price of the market. Okay, so this is under this language. You are able to know where should I enter and where should I exit. Okay, when I see this happening, when I see this type of development, what am I supposed to do? Because sometimes it does not happen immediately. When this has happened, you will discover that sometimes there is a pulling. Okay, buyers and sellers, they are fighting. Okay, you will see that the market is like ranging. Okay, it hasn't decided yet which direction it should take. But this is a signal that anytime the market might change direction, because sometimes it does not happen immediately. You will see these two forces still fighting. But at the end of the day, you will see that no, man, sellers seems like they are winning this game. Then you see the price is going down. Buyers have lost the battle. So this is a bearish engulfing bar. This is how it looks like when you go to your trading view. So you need to check it here around this Kilimanjaro, okay? When you go to your trading view, check the bearish engulfing bar. When the market has gone high up at the top here, one of the chart patterns that you might find, it is this one, okay? It is this one. So it has got a friend. It has got a friend. This is a female, okay? And there is a male. What I'm simply saying is, if this is a market reversal signal to the downside, and there is a market reversal signal to the upper side, all right? So what is that one? What is that uh, 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 bar? If that one is a bearish, a bullish engulfing bar, okay? This is a bullish engulfing bar. It is the opposite version of the bearish engulfing bar. So in this scenario, okay, in this scenario, you just need to flip the two candles, okay? So this one becomes a green candle and it is big or it is long in size. This one is a small candle, okay? And it represents selling pressure. In this scenario, the market is coming from this direction. Are you following? Because the market want to go bullish, meaning price want to go up. So if the price want to go up, it means the previous trend was a down trend, as you can see here. So the market has moved from high up here. It has come down here to the support level where the sellers, they normally rest when they have done their part in the market. They have run the race trying to bring the price down. Yes. So they are here. They are approaching this line here that we call it support. So in most cases, before this support is broken, you will see there is a reaction to price. Immediately, the price touches the support level. So in this scenario, it means sellers, they don't have that they were coming with when they were coming from the top here. Yes, pushing this price down. So when they are getting to the bottom level, the energy is exhausted. Are displaying a small bodied candlestick, meaning you can see that buyers now they see it as an opportunity to buy or to take the price from sellers. So you can see they came in, buyers, they came in, they started pushing the price to the upper side. Okay, so you can see that this candle has swallowed this one. Okay, this candle has swallowed this one. All right. Sorry, guys. I got kicked out of the Zoom because of network. So yeah, I'm back. I hope you can hear me now. I hope you can hear me now. My network is still not good, but I'm not gonna take that as an excuse. All right. So I was explaining about the bullish engulfing bar, how the buyers, they normally take the price from sellers, or how they normally overtake, yes, the market from sellers. All right. So we were talking about a bullish engulfing bar. I don't know if I'm able to share screen. Let me see. Please allow me to share screen, or you can just make me a co-host. You can just make me a co-host and remain with the host powers so that you are able to help me control the Zoom. Okay. So let me share my screen. So explaining
Coach Mopiwa, can you please unmute yourself? Coach Mopiwa, can you hear me? Okay, I've made you a co-host on the other number. Coach Mopiwa, unmute yourself.
Okay, can you hear me now?
Yes, we can hear you.
Okay, all right. So I see I needed a backup here. My Wi-Fi is playing around with me, so I have to use data here. So I'm joining with my other gadget. Let's see how it goes over here. Okay, so I was talking about a bullish engulfing bar. So let me share screen here. Maybe we can move a little bit fast so that we can cover a couple of things over here. Okay, so this is a bullish engulfing bar. The market is coming from the upper side. Okay, it is coming down to the bottom of the market or of the price. So you can see the significance of this candle here. It tells you that sellers, they don't have more energy to continue pressing the price to the downside. So that is the reason why this candle is small and this one is long. So this has swallowed this. That's why it is called engulfing bar. So this one has engulfed this one. In this scenario, it is buyers that are engulfing sellers. So this type of a chart pattern is mostly found at the bottom of the down trend. When the market has moved from the top, it has come down here. Okay. Around with the support level. Okay.
Coach Mopiwa, you are
Around
breaking. You are breaking. We can't even hear anything, please.
the level.
You are breaking, Coach Mopiwa. We can't hear you.
guys, yeah, today is another day. Yes, I don't know what's going on with the network today, on both side of my gadgets, but I'm not giving up. I'm not gonna give up until we do something. All right, so pardon me, just be patient. Just be patient with my network for today. This is something that I cannot control. So I will try. When I get it disconnected on this other side, I'm gonna connect on the other side. Yes, I do have two gadgets right here with me. So I will try. When I get kicked out on this one, you will see me coming back probably with the other one. I've got backup that is helping me here. All right, so let me share my screen and conclude on the bullish engulfing bar. Okay. Yeah, it happened. What is the solid candle? A same pressure candle and the max descending side bottom at the level likely to see engulfing bars has been down gone price has sellers
Your network is very, very bad, Coach Mopio. We can't even hear you now. The way you are breaking is very bad.
people they are joining me today on this Zoom. Yes, my village people they have followed me on this Zoom.
I
Yes,
think it's
so
high
people
time
are
for you to
requesting
relocate now.
that we
We cannot hear you. Coach Mopio, I can see you are back. Can you please unmute yourself?
Okay, just give me a few minutes. I just want to change the location, guys. Just give me a few minutes. Let me change the location. Yeah.
All right.
Okay. All right. How is my network here? How is my voice here?
Yeah.
Am I audible?
Yeah, now we can hear you properly. But I think you need to start from the beginning because we did not hear anything. You were breaking.
Okay. All right. All right. So let me share my screen again. All right. So my apology once again. Let's start over and then look at the bullish engulfing bar. Okay. So let's start from here. All right. So the bullish engulfing bar, it is a market reversal signal to the upper side, first of all. Okay. We spoke about uptrend and downtrend. All right. We spoke about these two, that the market will move from the top, it will come down. This is called a downtrend. The market will move from the bottom, it will go up. This is an uptrend. Now, when it comes to a bullish engulfing bar, it is a market reversal signal. Guys, my network is still fighting with me. I don't know.
Maybe
I thought
you need to climb in a tree right now because it's
unfortunately, Leader Julius has gone away with the mango tree where he has gone, so I don't have a tree here. All right, let's try one more time. If it fails, then we will just call it a day. We will continue tomorrow, right? Because it reduces the momentum when we are cutting off and off and off. Yeah, the spirit of learning, the spirit of teaching decreases. So let me try one more time. If it fails, guys, we will have to call it a day and then try again tomorrow. We are not giving up. We are just trying to find ways on how better we can do it. So my sincere apology for today's training. My sincere apologies, guys. Yes. Okay. Maybe we needed to do some prayers. My village people must go back. My village people must go back. Am I still here, Leader Preshi? Am I still here?
Yes, we can still hear you. Loud
Okay.
and clear.
All right. So this is a bullish engulfing bar. I think I have overstayed here. This is how it looks like. When you go to your trading view, you are going to see something like this. The market coming from this direction, which is the upper side of the market, it is coming to the downside of the market, signifying reversal. So you are going to see this type of a chart pattern at the bottom of the downtrend. So the bullish engulfing bar, you are going to find them at the bottom of the downtrend when the market has trended downward. When the sellers are trying to rest, it's when you are going to see the creation of bullish engulfing bar, signifying market reversal to the upper side, right? So this is a setup of a bullish engulfing bar chart pattern. As you can see over there, it looks like that. So this one is a red candle that signifies selling pressure. This one is a green candle that signifies buying pressure. So buyers are engulfing sellers, taking the market to the upper side. So when you understand this, you are able to position yourself. When should you enter the market, and probably when should you also exit the market? Okay, that is the reason why we are teaching you about this language of the market, the chart patterns. When you are able to identify them, then you are able to position yourself. When should you enter the market? You don't just trade blindly. You need to find a good spot, a good entry position, so that you know what you are doing, right? So that's the bullish engulfing bar. Okay, yes. Now, let me come and do dojis. Let me come and do doji candlestick chart pattern. All right? Yes, Doji candlestick chart pattern. If you remember very well, I spoke about the shadows. Okay, I spoke about the shadows, right? I spoke about the upper shadow. I spoke about the lower shadow. Okay, so you can see where we are right now, looking at these chart patterns. You are going to see something like this when you go to your trading view. You're gonna see a candle that looks like a cross, okay? A candle that looks like a plus sign. This is a complete candlestick, okay? If it was a 4 hours, if it was a 1 day time frame, you are going to see that it took 4 hours for this to develop. It took 1 day for this to develop. What does this mean? And what is the name of this candle? So this type of a candlestick, it is called a Doji candlestick chart pattern. Let's go to what it does. Let's look at the Doji in detail. Okay, this plus sign candle. This thing that looks like a cross. Let us have something on it. I hope I'm still in the Zoom. Please, Leader Preshi, confirm if I'm still here, because I know today the network is Demakar. Yes, it's upside down. Am I still here?
You're loud and clear.
Yes, yes, you're
Okay.
still here, Coach Mutu.
Thank you so much. Okay, so we are talking about Doji candlestick chart pattern. Okay, so the Doji candlestick chart pattern, it is one of the most important candlestick pattern. When this candlestick forms, okay, when this type of a candlestick forms, what you need to understand that it is telling us, okay, it is telling us that the market opens. Can you see where the market opens? When you look here, you are going to see that where it opened, that's where it closed. So if the market happens that the price was open here and also it closed at the same place, what does that mean? It means that there is equality. This signifies that the buyers and the sellers, their energy is equal. No one is taking over anyone. Are we together? So a Doji candlestick chart pattern, it signifies equality in the market. Not only equality, it also signifies indecision. Here, the decision has not been made. When it is like this, you don't know which direction this market is going to go. Is it going to go up? Is it going to come down? So you are not sure which which direction the market is going to take. So the Doji candlestick chart pattern, it signifies equality between buyers and sellers. It signifies indecision, that the market has not decided which direction it's gonna take. All right. So these are the two things that you are going to find out when the development of a Doji candlestick chart pattern appears. Now, these Doji candlestick chart pattern, they are classified into two, just like the engulfing bars. We looked at bullish and we looked at bearish. Okay, bullish and bearish. The same applies to dojis. Some dojis, when they appear, they signify bullish momentum. Some dojis, when they appear, they signify bearish momentum, depending on the shape of the candle. Okay, but this one, can you see where the price opened? That's where the price closed. So this is indecision. This is in equality, because it opened there, it closed there. Okay. In most cases, you will discover that the upper lower shadow and the upper shadow and the lower shadow, they are equal in size. In most cases, you are going to find out that this part and this part, they are the same in size. Okay, to signify that it is equality and it is indecision that is happening. All right, so let us look at types of dojis. Okay, let us look at types of dojis. Since we are looking at market reversal signal to the upper side and market reversal signal to the downside. So which dojis tells you that this market might reverse to the upper side? Which dojis tells you that the market might reverse to the downside? So let us look at one, possibly, if we're gonna still have time. Am I still here, ladies? Gents, am I still here? Please confirm. Am I still in
Yes,
the
we are
Zoom?
still here, Coach Mopu. Yes, we can hear you, please. Very clear.
Okay. So when you go to your trading view, you are going to see something like this. Okay, you are going to see something like this. This may happen. This may happen at the bottom or at the top of the downtrend. Okay, but you are going to see that sometimes when this appears, the market does not show direction immediately. You will see that there is a little bit of a fight. Buyers and sellers, they are still fighting to see who is going to win. All right, that's why we are talking about indecision in the market as well as equality in the market. So you will see something like this in your chart when you go to trading view. All right, so let me come here. Probably I'll finish with this dragonfly doji. Okay, a dragonfly doji. All right, a dragonfly doji. So this is a bullish candlestick doji. It signifies bullish market. Have you ever seen a candle like this when you go to your trading view? Have you ever seen a candle like this? You are going to find it. Okay? You will find it. Remember, I was talking about shadows when I was explaining about a shadow. Okay? Long lower shadow, long upper shadow. When I was dealing with shadows, if you remember very well, you are able to connect with me when I talk about a dragonfly doji. So a dragonfly doji, ladies and gentlemen, it is a market reversal signal to the upper side. It signifies bullish, okay? It is formed when they open. Can you see here? Can you see over here? That is where the opening price and the closing price are. The market opened there and also it closed there. Meaning to say the power of buyers and sellers is equal when we are talking about equality in the market. But now, what makes this to signify bullish? It is because of the appearance of the long tail. Okay, the shadow here at the bottom. This signifies buying pressure. When you go to your trading view, okay, when you go to your trading view, okay, if we may navigate, where is my trading view? If you go to your trading view and then you come and check, okay, you come and check, ladies and gentlemen, you are going to see that at the bottom of a downtrend, at the bottom of a downtrend, if you do not see bullish engulfing bars, you are going to see a dragonfly doji. Okay, you are going to see a dragonfly doji. Let me do this. Probably you may be able to see what I'm talking about. Okay, okay, but this is not a dragonfly doji. Okay, but there are dojis here. Okay, there are dojis here, but this one is not a dragonfly doji. Okay, this one over here is not a dragonfly doji, but these are dojis. Okay, can you see what is happening here? Can you see the development of these dojis here? So when I minimize my screen this way, you are going to see where the market is coming from. Can you see? It was a downtrend. It was a downtrend from this level to this level, right? Until the market changed direction. So when you check right here at the bottom, right here at the bottom, you are going to see what type of candles are forming here that are signifying that, man, this market might change direction. Okay, so when you enlarge your screen, you will see that there is appearance of dojis here. There is appearance of dojis here. What is this telling you? It is telling you that the market might change direction. As a result, it indeed happened. Can you see what happened afterwards? Can you see what happened afterwards? So when you are aware of this, then you are prepared when to enter the market. But I'm not saying you should start entering the market using a dragonfly doji. There are still other things that you need to learn before you make your entry in the market, okay? But first of all, understand, okay, how does the market change direction? What signifies it? How can you know that the market might change direction? All right, the market might change direction. Okay, so that's what we are looking at. That's what we are looking at. So a dragonfly doji, it is a market reversal signal to the upper side. It signifies bullish momentum. Okay, it signifies bullish what? Bullish momentum. It helps us understand that the market might change direction to the upper side. Yes, so this is what I was talking about shadows. Okay, can you see here? Can you see this candlestick over here with a long lower shadow? This is a buying pressure. Okay, this signifies buying pressure. All right, so that dragonfly doji over here, it tells you that indeed, first of all, there is equality because the opening price and the selling price, they are at the same level. But the presence is buying pressure and the market might change direction. As I said, when this appears, the market might not change immediately. Sometimes there is a struggle, there is a battle that is going to happen. But the appearance of these dodges, they tell you something. Wait, if you are doing it in 4 hours, wait a couple of hours and see what's going to happen. You will see that the market has shown the direction where it is going. So that is a dragonfly doji, which signifies bullish momentum of the market. Yes, maybe I was moving fast, but let me leave it here. If there are questions, I think I can take them now. If there are questions, I think I can take them now, but let me leave it here. So I've only spoken about the bullish engulfing bar as well as the doji candlestick pattern. Under the doji candlestick pattern, we have looked at a bullish candlestick pattern of doji, which is called a dragonfly. Yes, the market flies to the upper side. The dragons, they come and push the price to the upper side. That's why it is called dragonfly doji. There is flying of price. When you see dragons emerging at the bottom of the downtrend, then you can make sure that you go to the shop and buy your crypto wallet or you buy your crypto bag, because there is some profit to collect when that has happened. Okay, questions, guys? Questions, guys? Questions, guys? Anyone with a question? Anyone with a question? Anyone with a question on the dragonfly doji, the doji itself, as well as the bullish engulfing bar? I have spoken about those two. I'm going too fast, Joy. I said that a dragonfly doji, it is a candlestick chart pattern that signifies market movement from the bottom to go up. And you are going to find it at the bottom of a downtrend. Okay? You are going to find it at the bottom of the downtrend. That's where you're going to find a dragonfly doji. Remember, it's a signal that the market will go up. So it needed to be found at the bottom because the previous trend was a down trend. So the market need to change direction to go up. So the appearance of a dragonfly, you are going to see it. Okay. A dragonfly doji is not a pin bar. A dragonfly doji is not a pin bar. You're going to understand it very well when I start talking about hammers. Okay? Yes. Hakim. I'm going to talk about hammers. So when I talk about hammers, then you're going to see the difference between a dragonfly doji and a hammer, which is referred as a pin bar. A hammer is the one that is referred as a pin bar. Okay? A pin bar has got a little bit of a body, while a dragonfly doji or dojis, they don't have bodies. You will see something like a cross, where the opening price is where the closing price is. When it comes to a doji, I said about indecision. Don't ask me about the opposite of a dragonfly. I have not taught yet. Stick with the dragonfly for now. The opposite of it, you're gonna hear it tomorrow. Okay? Yes, don't go ahead of the lesson. There is the opposite of the dragonfly, but you're gonna hear it tomorrow. Today, go home with the dragonfly. Take it home. So tomorrow, you're gonna know what's the dragonfly, its opposite. No, I'm already done. I'm already done. We are not continuing. I'm only taking questions. I'm only taking questions. We are already done for today. Sorry for the network. All right, we could have covered maybe 3 or 4 chart patterns, but because of the network, we couldn't. So let's continue tomorrow. If we are going to have good network, I think we're gonna cover a couple of chart patterns, because I said that by Friday, we should finish the most likely chart patterns that you are going to see in the market. All right. Arafat, you don't understand what I'm teaching. My friend, me and you. Arafat, you don't understand what I'm teaching. All right. You are going to understand it. Don't worry. You will understand it. Okay? You're going to understand it. So this is how a dragonfly doji looks like. Somebody says I should show again the dragonfly. This is how it looks like. Okay? So when you come to trading view, let me see if I can find one. Okay? When you come to trading view, you are going to see something like this. More likely something like this. Can you see this? But this is not a dragonfly, because the closing and the opening of the price should be at the same price. But it looks like this. A dragonfly doji, it looks like this. But this one is like a pin bar, because there is a body here. Where the price opened is not where the price closed. All right. So a dragonfly doji or a doji, the opening and the closing of the price should be at the same price. Okay. Yes, but it looks like that when it comes to dojis. It looks like that. Okay. So this is a pin bar. Someone who was asking, I'm going to talk more about these ones tomorrow. The hammers, I'm going to talk about them tomorrow. So this is not a doji. This is not a doji. No, it is a pin bar or a hammer. All right. Yes. Okay, let me end up here for today. Yeah, probably this one we can call it a doji. Right? Okay, that's it. I hope you have learned something despite the cause of the network. I hope you have learned something despite the cause of the network. What do I mean when I say a doji? It means you have not joined this Zoom now. I mean, when we started. What do I mean when I say a doji? It is a chart pattern, a candlestick chart pattern, just like the engulfing bar. It is a group of candles that signifies market movement to the upper side. So they look like a plus sign, or they look like a cross. They are candles that tells you that the market is going to reverse. When you go to your trading view, you're gonna see these candlesticks. Okay, guys, let me go and drink some water. I will see you tomorrow morning, if God permits. There's still other Zooms that are coming, so I hope we will meet there. But my voice is going to be heard tomorrow morning, yes, in this Zoom again. So for today, let us leave it here. Thank you so much for your patience. Thank you for your understanding. Yes, I know it was not a good day when it comes to learning, but nevertheless, we managed to handle the situation. So thank you so much for your understanding. Let us meet in the upcoming Zoom. All right. See you then. Bye-bye.